IFRS 16 is the new accounting standard for leases. The widely known headline is that it's going to require almost all leases to be capitalised on balance sheet. And in comparison with where we are now, that will mean an increase in assets and liabilities, and on the income statement a swap of an operating expense for a combination of depreciation and interest. What that does mean is that for those companies that focus on a measure such as EBITDA as a key performance indicator, there's going to be an increase in apparent profitability, even though commercially nothing particular has really changed. One of the other points is that if you look at it on a lease-by-lease basis, in the early years there's going to be a higher overall charge because you'll have straight-line depreciation typically, and in higher interest expense in the early years because of the higher lease liability. One of the other changes that IFRS 16 has brought is that although it's similar, the definition of a lease is very widely drafted. And what that means is that in addition to looking at what you might more traditionally call lease contracts, which are directly of assets, you also have to have quite a careful look at service contracts which involve the use of assets. Because in some cases you can find that a service contract also includes a lease, and so something else needs to come on balance sheet. Anyone who has a sale and leaseback transaction is likely to be affected by the new requirements, and that's because although the requirements look similar, the drafting's a bit tighter, and so you're less likely to have a sale transaction being accounted for like that. You're much more likely to have a secured loan under IFRS 16. And part of the reason for that is that the terminology in IFRS 16 has been made consistent with the new revenue standard IFRS 15, so they go hand in hand. As a knock-on effect of that, this means that a number of companies are looking at whether they might adopt IFRS 16 early. It's effective in 2019, IFRS 15 is 2018. And there are two reasons for that. One is if you have a sale and leaseback transaction, you get symmetry. The other is that you avoid having two changes of accounting in quick succession. There are two options in IFRS 16 that companies will need to think about quite carefully. One is that you don't need to capitalise leases which have a total potential period of less than 12 months. Now, this is likely to be a very restricted option because 12 months takes into account any extension options which are embedded into a lease. So you can't simply set one at 364 days with a 364-day extension period. It's got to be something which substantively really is a short-term lease. The one which is perhaps going to be more widely used is the exemption for low-value leases. And this is one where on an individual basis you can look and see whether an asset when it was new was of what's regarded as a low value. There isn't specific guidance in the standard to tell you what that is, but in the basis for conclusions, the ISB has noted that when it was finalising the standard towards the end of 2014, they had in mind an amount of around $5,000 US. That's something that companies can look at themselves. For example, in some jurisdictions, $5,000 is rather a large amount, and so you might want to have a lower threshold, but the option is there and it's available for use. There are two ways to adopt the standard. Either you do it on a fully retrospective basis, including the restatement of comparatives, or you do it on a retrospective basis but with an adjustment at what's called the date of initial application, which is the first day of the current accounting period in which you adopt the new standard. There are also a number of reliefs to ease the transition onto the new standard and make it a little bit easier. So in contrast with a number of standards that we often see coming out, the transitional provisions in IFRS 16 are important and need to be considered quite early on in projects. The first one might seem quite obvious, but it is, do you know where all your leases are? Do you know how many leases you've got? So you need to work out where your inventory of lease contracts is and gather them all together. There's then a question of what's the effect? What's the effect on the balance sheet? What's the potential effect on profit or loss? And does that mean that there are any key ratios in your financial statements that change where you need to think about it a bit? There might be something on banking or lending covenants. It's possible, although less likely, that there will be an effect on performance-based remuneration. There's then the question of external communications. How are you going to tell the markets the effect? We know that analysts already make adjustments for the effect of operating leases to bring them on balance sheet, but these are estimates, and you're going to have the hard numbers now. So how are you going to explain these to markets so that they can reconcile the estimates that they've made in the past to what you're now showing them on the balance sheet? The other question is, what are you going to do in future? So between now and the date of adoption of the leases standard, how many new leases are you going to enter into? Do you have any planned sale and leaseback transactions that you're going to need to account for? And in addition to that, you might have lease contracts at the moment that you've negotiated. Perhaps with the requirements of the new standard, you'll need to think about whether these need to change going forwards. And that's going to need some forward planning because, as with all of these things, amending lease contracts takes a bit of time. So to start with, you've got to make sure that you've got sufficient knowledgeable resource to carry out the work. Some of the standards requirements are really in the detail, so you need to have someone on board who really knows that detail and can understand how it relates and links into your existing lease contracts. You need to have appropriate board sponsorship, so it needs to be in the board's agenda, and it also needs to be in the audit committee's agenda. And both of these groups need to be suitably briefed so that they understand the differences between where we are now under IAS 17 and where we're going under IFRS 16, so that they can ask appropriate and awkward questions of people. It's also important to give yourself enough time. As time gets short, then typically you find that out of accounting system entries tend to get made. Excel spreadsheets become very popular, and that brings the potential for error. It also means that there's probably going to be a period of bedding down after the initial adoption of the standard until you get into business as usual where it's fully integrated into the accounting systems.